We've been trying to reach you about your car's extended warranty. That one line has become a running joke. You see it in memes, TikToks, and comedy skits. But behind the joke lies a real problem. Those calls, those contracts, and those pressure sales tactics cost Americans billions every single year. Car warranty scams are one of the biggest consumer ripoffs in the auto industry. They prey on fear, confusion, and the fact that most people don't read fine print until it's too late. In this video, we're going deep. The history of car warranty scams, the sneaky phone call tricks, dealership upsells, third-party traps, the psychology behind why people fall for them, and most importantly, how to protect yourself. Stick with me, because what you learn here could easily save you thousands of dollars and a whole lot of stress. Extended warranties weren't always seen as scams. In the 1980s, automakers realized that people were nervous about buying cars with more complex technology, so they began offering longer factory warranties to reassure buyers. At first, it worked. Customers felt safe, knowing their car was covered for a few extra years. But dealerships spotted an opportunity. They realized they could sell add-on service contracts for huge profit. These weren't real warranties from the manufacturer. They were third-party contracts filled with exclusions. By the 1990s, extended warranty sales had become one of the biggest moneymakers for dealerships. In fact, some dealerships made more money selling warranties and add-ons than selling cars. Then came the telemarketing boom. In the 2000s, companies started buying phone lists and mailing addresses, blasting out calls and letters saying, "Your warranty is about to expire." The most infamous case? U.S. Fidelis. At its peak, it was the nation's largest extended warranty company, pulling in hundreds of millions of dollars. But in 2011, the FTC and state attorneys general went after them. Turns out they were misleading consumers, charging thousands for contracts full of loopholes. The company collapsed, executives went to prison, but the scam didn't die. Why? Because the model was too profitable. The moment one company gets shut down, another pops up with a new name, and the cycle continues. You know the call. Maybe you're at work, maybe driving, and the phone rings. A voice says, "Your vehicle's warranty is expiring. Press 1 to renew now." Here's how it works. They buy your info from shady data brokers, sometimes even your VIN, your mileage, or your dealership history. They pretend to be calling on behalf of your manufacturer or dealer. They use fear. If you don't act now, you could be stuck with a $6,000 repair bill. One woman from Florida shared her story with the FTC. She got a call claiming to be from her dealership. They had her VIN number, so she trusted them. She paid nearly $2,800. When her air conditioning failed, she tried to make a claim. Denied. Why? Because the policy didn't cover HVAC components. Another man in Texas was charged monthly on his credit card for 2 years, only to find out the company was a shell corporation. No office, no customer service, just a disconnected line. In 2022, the FCC reported that car warranty robocalls were the #1 type of spam call in America. That year alone, Americans received over 8 billion warranty robocalls. These scams thrive on volume. If even 1% of people say yes, they make millions. And because most call centers are overseas or hide behind fake business addresses, it's hard to trace them. Bottom line, if you get one of these calls, hang up. No legitimate manufacturer calls you out of the blue to sell you coverage. Now, not every scam comes from a phone call. Some come from the dealership where you buy your car. Here's the setup. You just spent hours negotiating. You're tired. You just want the keys. You're sent into the finance office. The finance manager flips through papers and says, "For just $20 more a month, you can protect your car with an extended warranty." Sounds reasonable, right? But that $20 a month might actually be $3,000 rolled into your loan with interest. And here's the kicker. Most of those warranties are filled with exclusions. They'll say, transmission not covered due to wear and tear. Electronics not covered. Labor capped at $60 per hour when your mechanic charges $120. Real case. A driver in California bought a $3,500 warranty at a dealership. When her transmission failed, She filed a claim. Denied. The reason? They claimed she didn't do her fluid changes at the exact mileage intervals, even though she had receipts. Why do dealerships push these so hard? Profit. The average markup is 100% to 300%. Finance managers often get a commission on every warranty sold. That's why they pressure you, guilt you, and try to make you feel reckless if you say no. These are the companies you see on TV and radio. Protect yourself from costly repairs today. The problem? Their contracts are full of traps. They'll deny claims because of improper maintenance. They'll make you pay out of pocket first, promising reimbursement, which never comes. They exclude the most expensive parts like turbos, electronics, and advanced sensors. The Better Business Bureau receives thousands of complaints every year about warranty companies refusing to pay. One story: a driver in Missouri paid faithfully for 4 years. When his engine blew, he filed a claim for $2,800. The company denied it, saying he didn't use the right brand of oil. Some mechanics refuse to even deal with these companies because they don't get paid. That leaves drivers stranded, even after spending thousands on coverage. The pattern is clear. These companies collect premiums, deny as many claims as possible, and pocket the profits. Here's an important distinction. A true warranty comes from the manufacturer. It's included in the price of the car. It's backed by federal law. What you're being sold at dealerships or over the phone are usually service contracts. They are optional agreements with third parties, and they're not held to the same standards. Manufacturers like Honda or Toyota sometimes offer extended protection plans, which can be fine if the cost is fair. But third-party contracts? They're usually structured to protect the company, not you. This language confusion is one of the biggest tricks in the game. People think they're extending their factory warranty. They're not. These scams aren't random. They're built on proven psychological tricks. The people behind these calls, sales pitches, and ads know exactly how to push your buttons. Let's break it down. Fear of the unknown. Nobody wants to face a $5,000 repair bill. So scammers lead with fear. Your transmission could fail at any time. They play on the anxiety that your car will break down tomorrow, and without coverage, you'll be financially ruined. Anchoring. They throw out big, scary numbers. A new engine costs $7,000. A transmission, $5,500. Once that's in your head, suddenly their $99 a month plan feels cheap, even though it adds up to thousands over time. Urgency and scarcity. Phrases like, "This deal expires today," or "You must act before your coverage lapses" create panic. The goal? Stop you from slowing down and thinking logically. Authority. Many scammers pretend to be from your dealership or manufacturer. They'll drop details like your VIN, mileage, or even the make and model of your car. That builds false credibility. Some even send letters with fake government seals or logos that look like official automaker branding. Social proof. Callers may say, "Thousands of drivers in your state are protecting themselves with this coverage." Humans tend to follow the crowd, so this trick makes you feel like you're missing out if you say no. Foot in the door technique. They start small. "Can I just confirm your mileage?" Or, "Would you like a free quote?" Once you answer, you've engaged, and now you're more likely to keep talking and eventually give them money. Personalization. Ever notice how the caller sometimes says your car's year, make, and model? That makes you think, "Wow, this must be real. How else would they know?" But the truth is, your data is often sold by third parties like insurance companies, service shops, or even online car listings. These tricks are all about emotion, not logic. The scam works because it makes you feel like you're protecting yourself, when in reality, you're signing up to lose money. Let's be clear. Extended warranties and service contracts are designed to make money for the dealers and providers, not the drivers. The dealers profit. When you buy a warranty at a dealership, the markup can be insane. A plan that costs them $1,000 might be sold to you for $3,000. That's a 200% profit margin. Finance managers are often paid bonuses based on how many warranties they sell. That's why they pressure you so aggressively. The warranty companies profit. Warranty providers operate like insurance companies, but with less regulation. They know most people never file a claim. When claims do come in, they look for every reason to deny them. Improper maintenance, pre-existing issue, or not covered part. Every denied claim equals pure profit for them. The investor angle. Many big warranty providers are backed by private equity. These firms buy warranty companies, squeeze as much profit as possible, and don't care about long-term customer service. When complaints pile up, they shut it down, rebrand under a new name, and start over. The numbers don't lie. According to Consumer Reports, nearly 50% of people who buy an extended warranty never use it once. Of those who do file a claim, many get only a fraction of the repair costs covered. Meanwhile, the companies pocket billions. Why automakers rarely push them? Here's the twist. Real car manufacturers don't push extended warranties nearly as hard as third parties. Why? Because they often lose money on them. Automakers focus on selling cars. It's the dealers and independent warranty providers who rely on warranties as their golden goose. So when you ask, who benefits from extended warranties? The answer is simple. Dealers, providers, investors. And who loses? Almost always the driver. The easiest way to protect yourself from car warranty scams is to know the red flags and ask the right questions. If someone contacts you out of the blue, whether by phone or mail, it's almost always a scam, since real manufacturers don't cold call. Watch out for letters marked Final Notice or coverage lapse, designed to scare you. Another warning sign is when a company won't provide a written contract up front, pressures you with lines like, "This deal expires today," or gives vague answers about what's included. If you're ever considering a plan, ask smart questions. Who underwrites this policy? What parts are excluded? How are claims paid? What labor rates are covered? And can you cancel for a refund? Most shady contracts either exclude the most expensive repairs, reimburse instead of paying shops directly, or pay far below market labor costs, leaving you with the bill. Always check reviews on the Better Business Bureau. Look up complaints with your state attorney general, and see if the company has a history of lawsuits. The rule of thumb is simple. If you didn't go looking for a warranty, but someone came looking for you, it's probably a scam. If the deal sounds too good to be true, it is. And if you feel rushed, pressured, or confused, stop, because no car repair is worth wasting thousands of dollars on worthless coverage. All right, let's say you've already paid for one of these so-called warranties. What now? Don't panic. You still have options. The very first step is to cancel the policy immediately. Most contracts include a cancellation clause, but companies rarely explain it clearly. If you cancel within the first 30 days, many are legally required to give you a full refund. After that, you're usually entitled to a prorated refund, meaning they subtract the time the policy was active and refund the rest. Always demand this in writing, and never rely on a phone call alone. Next, dispute the charges. If you paid with a credit card or through financing, contact your credit card company or bank. Many credit card providers allow you to file a dispute for fraudulent or misrepresented charges. If you financed it through a dealer, ask the lender to remove the warranty from your loan balance. This is often possible if you act quickly. Then, file complaints with consumer protection agencies. The Federal Trade Commission, FTC, investigates car warranty scams, and so do many state attorneys general. The Better Business Bureau also tracks complaints, and companies with hundreds of BBB complaints are often forced to settle or refund. Another powerful option is to join a class action lawsuit. Many third-party warranty companies have been sued for fraud, and if you're a customer, you may be eligible for compensation. Search online for lawsuits against your provider, or check your state's consumer protection website. Finally, document everything. Keep copies of the contract, emails, call records, and any promises made by sales reps. The more evidence you have, the better your chances of getting your money back. It might take time, and you may not recover everything, but taking these steps can stop them from draining more money from your pocket. So, if extended warranties are usually a scam, what actually works? Let's talk about real alternatives. The first and safest option is a manufacturer-backed extended warranty. These come directly from the automaker, like Toyota Extra Care, Honda Care, or Ford Protect. While not perfect, they're much more reliable because they're backed by the brand itself, not a shady third party. Still, you need to read the fine print and make sure the cost is worth it compared to the potential repairs. The second option is what I call the self-insurance method. Instead of paying $100 or $150 a month for a warranty contract, put that money in a separate savings account. In just 2 years, you'll have $2,400 to $3,600 saved. Money you control, money that can cover real repairs, and money you don't lose to exclusions or denied claims. Third, look at credit card and insurance perks. Some premium credit cards offer car rental or repair coverage, and certain auto insurance add-ons cover breakdowns and roadside emergencies for far less than warranty contracts. Fourth, consider certified pre-owned (CPO) programs. If you're buying a used car, a CPO vehicle often comes with an extended manufacturer warranty included in the price. This is far safer than rolling the dice on an aftermarket plan. And finally, the most important alternative of all, proper maintenance. Following your manufacturer's service schedule, oil changes, brake checks, fluid flushes, and inspections is the cheapest and most effective way to avoid massive repair bills. Spending a little on maintenance now saves you thousands later. The bottom line, you don't need a third-party warranty to protect yourself. You just need knowledge, a little discipline in saving for repairs, and a trusted mechanic. That's worth far more than any contract filled with fine print designed to deny you coverage. So the next time you hear, "We've been trying to reach you about your car's extended warranty," you'll know the truth. It's not a helpful reminder. It's a scam, a billion-dollar trap. But now, you know how it works, how to spot it, and how to protect yourself. If this breakdown helped you, hit that like button, subscribe to Truth Tuned, and share this with a friend who keeps getting those calls. Stay smart, stay safe, and I'll see you in the next one.